after 12 years of doing it, I just didn't have that spark when I would wake up and then I started doing multifamily and I found the spark again. And so I think that was just a clear sign to me that I needed to be going to where my energy was taking me. And so I wanted to put more of my time into multifamily.
Eric, welcome to the show today.
Hey, thanks so much. Happy to be here, Michael.
Hey, so you quit your job after you've done your first deal. So why did you do that? Why did you do your first job and not your first deal or not your third deal or whatever else? Why after the first deal?
Well, I had been in sales for, 12 years prior to that. I was ready for a new challenge, something that stretched me, made me better. And, 12 years of doing the same thing over and over, I was ready for something new. And so I was searching for multifamily, found it, finally started building some momentum. But I was, waking up every single day, I was more excited about doing multifamily than I was my job. So that's when I knew I was going the right direction.
So you had some savings, I assume. And can you share what your acquisition fee was on that first deal?
Yeah, my portion of it was 106,000.
So that's not insignificant. And what I find is a lot of times it's the acquisition fee that gets people to quit their job. It's not so much the passive income because that comes a little bit, down the road, year 2 or 3, but the acquisition fee is meaningful,
Sure.
Because you got a burn rate of over $10,000-$15,000. Now you have a 6 to 12 month runway plus your savings. And you're like, you know what? The faster I can get full time on this, the faster I can accelerate those results, which you did. I mean, you just shared with me what you've done in 18 months, and it's incredible. But talk about, before we get into that, you said you were doing sales for the last 10, 12 years or whatever. Why did you want to get out of that? Because it sounds like you had a pretty good thing going. Your life was pretty good.
Yeah, sales was good and it taught me a lot. I was in the solar industry, so I was putting solar panels up on roofs.
Yeah, that's exciting.
It was a great industry, great space. But I was just truly, after 12 years of doing it, I just didn't have that spark when I would wake up and then I started doing multifamily and I found the spark again. And so I think that was just a clear sign to me that I needed to be going to where my energy was taking me. And so I wanted to put more of my time into multifamily. But yeah, no, my sales background definitely was going fine. But the last 2 or 3 years, performance is starting to decline because I didn't have as much passion for what I was doing. And that was a red flag to me. It may help me realize I need to be putting my energy and focus towards where I do have that passion and fire.
Yeah, but could you could have just got another sales job or something you like more, selling Ferraris or something, why not that? Yeah. And why throw it out the window?
Yeah. And, I think I tried to, figure out where my skill sets could relate in the multifamily space. And, but I think it stemmed from my family. I grew up in a family that had real estate, my whole childhood, both single family and multifamily. My parents had a 26 unit and a 42 unit building. But part of the reason why I wanted to jump into multifamily was they were self-managing all 10 of their properties, their single family properties, and both their multifamily. And I just saw that they were doing it wrong. And I wanted to kind of help them become more passive and help retire them.
Yeah. I find that a lot of times people bring in their professional experience into the multifamily space and they really play into their strengths, and then they tend to joint venture or partner with others who complement them. What were some of your strengths that you brought in from your sales background? What did you find, or maybe even your partners find, useful about your background?
I think it just comes from, learning to communicate really well over the years, from doing some sales. But, you talk to a variety of different people from all different walks of life, and you learn how to communicate, quite a bit better. And I think that translated directly over to, capital raising, investor relations, learning how to tap into social media a little bit more. But yeah, I think that's really where it was just forming good relationships. I attribute a lot of my success to the people that I surrounded myself with.
So communication, relationships. What about work ethic though? And the reason I bring that up is because not everyone sticks with it, right? There's a lot of people who get really excited and they get into it and they kind of fall off. And with sales specifically, you are taught it's a numbers game and you got to grind, you got to hit the phones, you got to just grind it out. And I find sometimes people who don't have that kind of background, they kind of miss that piece. How important is that, do you think, for your success?
I think it's huge because I think mindset's a big factor of this, because you have to learn how to be able to take rejection. I mean, we submitted 27 offers before we even got our first deal. And, around 23 and 24, I wasn't nearly as motivated as I was, 1 through 5. And so having a good, strong mindset and being able to take rejection and keep pushing is kind of what kept me going.
I mean, did you have any kind of, some kind of maybe adult supervision that says, "Hey, keep going"? Or are you at this point so self-motivated? They're like, "I don't care. I'm going to do this until I'm blue in the face. I'm going to keep putting in offers."
Oh, no, no way. I wish I could take all the credit, but I mean, as much as most of the time I was good, but there were still plenty of times where I was like, man, will I ever get a deal? And I think a lot of new people coming into the space probably think the same thing. And I'm a firm believer that the only time you lose in this business is if you quit.
So I relate to the sales side for sure. I sold knives door to door pretty much for Cutco back in the day. What did you sell?
I sold solar. I sold home automation. I sold satellite TV. And then I switched over to solar as my last product that I was selling. So, but yeah, I went door to door for several years.
Ton of rejection there. So part of what you're talking about right now is it's interesting because you almost get that training for rejection in sales. I think sales is the closest thing that you can find to entrepreneurship. So if I have someone I know that I care about that's like, I really want to be an entrepreneur, and I'd say the next step for them, if they're just really not that person, is I think sales is the great training ground for that. So I can see the correlation between the amount of offers you were putting in and maybe the rejection that you were feeling on the sales side. I mean, it definitely you kind of live for that one win. So you put in a ton of these offers, you finally got them. What was that moment like, and what do you think led you to that particular situation?
It was a lot of emotions. It was emotions. It was excitement. And then it was also like, holy crap, like, what do we do now? Like, like what do I do? I don't know. And so, thankfully you have, teammates, sponsors, different people you can lean on to, get these things done. Right. But, it was really, really exciting. A lot of hard work finally came to fruition, and it was really exciting, but also a little bit of fear. But, in those moments, you lean on people that have done it before. So.
Yeah. So you kind of took your relational capital, and then, how long did you build that relational capital up before you actually did something with it?
From the very beginning, I was building relationships. I was raising capital. I was doing all sorts of things I could for the first 7 months, and just trying to add value to other people. That was the way that I approached this thing. How can I add value to you? How can I add value to you? And, it's hard to add value when you're new, you don't really know how to add value, but if you just keep putting yourself out there and trying, people will let you know what they need. And if you can fill that void, then, well, you got a partnership.
So another version of this, bumping your head against the wall until you figure it out. So talk to us about, like, how did you figure out what value you're going to add to somebody, and what transpired from that? I'm just curious.
Give an example.
Yeah. So, one example was like the part of the way I got into my first deal. It wasn't even my deal. I got brought into it. I helped in a couple of different ways. But I actually joined a mastermind group and, did some mentoring, and that helped a ton, but they offered us to be able to go do some due diligence and just go observe. And so I just volunteered and went and observed, and I just tried to help out as much as I could, help out the operators on that deal as much as I could during their due diligence process. And I actually made some good relationships with the operators on that deal, and ended up getting brought into that deal for raising capital, and also for helping with asset management, because I was local to that market.
But you didn't ask for a compensation up front. So it just kind of worked out that way.
I offered it for free. I just wanted exposure.
Nice.
Yeah.
This is so key.
Yeah.
Not everybody thinks like this. This is a really good point, because, if you give and give and give, eventually someone's going to be like, you know what, dude, come on in. Even if you have no experience. And I don't think everybody approaches it that way. That maybe, there's people out there that are looking for, all right, what percentage if I do this? It sounds like you just kind of dove in there. Finally, you figured out a skill. You started doing the skill over and over again, or whatever. You kind of just started to learn. And I think what people get too hung up on is they're like, I have to be just the deal finder, or I have to be just the money raiser, or whatever it is. But
I want these terms, or I want these terms.
I want these terms, or else
I want to get paid like this.
Yeah, exactly. They get too caught up in like the specifics. And the reality is there's so many different ways you can add value into a syndication, into a partnership. And the best way to figure out what you're going to add is just to go and try to do it. Even like you did, just go and helping out with DD or whatever.
Yep.
And I think people try to limit themselves too much. As I'm this, I'm that. And because there's such a broad spectrum, the more of these skills you can pick up along the way, the more valuable you're going to be to any partnership. Like I've gotten to a place now in my career, 11 years in, where there's not a lot of parts of the business that I can't do. I could pretty much do any part of it. Now I'd like some parts more than others, but the reality is, I cut my teeth on the deal finding. That was like my biggest value add. That was where I went the deepest. But then I started adding all these other skills along the way. And not only that, it was about the skills that I wasn't good at, getting just dangerous at it, just enough to be dangerous. I hated accounting going
Right.
into this stuff. I hired a consultant to teach me accounting because now I know I need that for the business. Right. So I'm curious, Eric, what other skills how did you pick up other skills along the way to get into that position?
Yeah, I think it was just put like one through mentoring and coaching, right? I think that's huge. If you guys have the opportunity to jump into some sort of coaching and mentor program, I know you guys have one. I'd 100% recommend it. That jump started my trajectory in this space a lot, but I just really let the interpersonal skills come out and just offered help as much as I could. And even if I didn't know what I was doing, I'd try to figure it out.
I think you have to be a little flexible with opportunity, because if I heard you correctly, you made 27 offers or whatever. And so you're looking for your own deals. Yet here you end up going with someone with a deal you didn't find. And a lot of people get hung up with that. You're like, no, it has to be my deal. And you said, you know what? It doesn't have to be my deal. And this is so important to get into that first deal, really at all costs. We talked about not getting paid for it. I mean, that the value of that first deal it just pales in comparison to what that first deal does for you, the track record it gives for you, and all that stuff. And this is why we talk about the law of the first deal all the time. And I'm curious, I don't know if you experienced that as well. Once you close on that deal, you raised your capital. What did that do for your business?
Oh man, you're hitting it on the head, because right from that point on, I mean, we had instant credibility. Everything changed. And, regardless of how big of a piece of that first deal we were, it changed everything. Brokers took us seriously. The lenders did. Our investors that we had already built up took us more seriously. It just opened up so many doors. And then also, just other people, that I'd connected with on Facebook, social media, and, that led to another sponsor. And, right after we closed the first deal, 10 days after that, we got an LOI accepted on our second deal, another 144 units in Houston. So it opened up all the doors I could have asked for.
Yeah, that's pretty cool. So how did you scale? So what I mean by that is, specifically, you partner on your first deal. Did you do a repeat deal with all of those partners, or some of those partners? Did you do a new partnership, or how did you scale yourself? What did that look like on a partnership basis?
Yeah, one of the partners from the first deal, her and her husband just, really took a liking to, myself, my team, said, hey, we kind of want to take you under our wing. We'd love to sponsor your next deal. Let's start looking. And kid you not, 10 days later, we got the LOI accepted, and it was very exciting. That was a fun one.
Was that yours, or was that her deal?
That was it. That was a deal we found.
So
every
cool.
deal since then has been ones that we've found.
That's awesome. So you said that she liked your team. What does that mean? What team did you have built leading up to that first deal then?
So at that point, just, myself, but also my team. So about a month into my journey, I realized there was way too many hats to wear for me to do this by myself. As talented as I would have liked to have thought I was, it still needed a bunch of help to do this. So I actually ended up bringing in my fiance's mom and dad as my business partners. And trust me, I was extremely hesitant to do that. Didn't want to mix the family and business side of things, but I'm actually grateful we did. It's actually brought us much closer. And yeah, I mean, it was going to go one of two ways, right? It was, we close deals and everyone's happier. Well, we don't, and now I might not have a wife. So anyway, I'm grateful it went the way it did. And my fiance's parents, they have skill sets from their previous, careers that translated directly over into this as well. And we just kind of divide and conquer, stay in our lanes, and we tackle these deals together.
All right. So how do you do that? Because this is so important. What lanes what are the lanes? How do you split up the partnerships with regards to roles and responsibilities?
Yeah. So we have Brett and Megan Davenport, my fiance's mom and dad. Brett, he's a Excel spreadsheet guru, numbers expert. He's been doing it for 20 plus years. And so he is our underwriter and acquisitions guy. So we all kind of source deals when they come up, but we send them over to Brett. He does all our underwriting. After it passes that, then, kind of comes to me to raise the capital. So I do the capital raising, investor relations, social media, content creation, marketing, overall brand development to try to attract investors to us. And then after that, once we close, we pass it over to Megan. She does our asset management for each deal as well, and she's a rock star at it.
Yeah,
really, she does everything, but she's our secret weapon. She's our MVP, but she focuses on asset management.
The thing is, I understand is that you will always share roles because these are all small companies, so everyone's going to be involved in asset management. But what I've observed, the partnerships that work the best is when there is only a single person accountable for one function. So, only one person is accountable for asset management. Now, should the partners help? Yes, they should, but one person has to be accountable. And I found partnerships that often don't work out is when there is muddled or confused or shared accountability. So that's pretty, this is pretty cool. And so, so you've had a partner that was that second deal you found, and this other partner helped you basically raise capital for it. And then you guys basically you closed on it and are operating it. And so this one partner is really focused more on this particular deal, focused on the capital raising.
So the sponsor on the second, you mean?
Yes.
Yeah. So she helped with a ton of stuff. She just gave us a bunch of guidance, but she helped raise capital along with us as well. And just overall, just kind of overseeing things to make sure we're doing them all right. But it was great hands-on experience working with her and her husband. Yeah.
That's awesome. So where are you now in the size of portfolio, number of units, and number of different properties, assets under management? Where are you right now?
Yeah. You fast forward to today, I got into the space December 2020. And, it was a up and down road for sure. It wasn't sunshine and rainbows by any means, but that's why I think mindset and, just being able to push through some of those rejections was key. But now you fast forward, we're about to close on our 5th large deal. And that'll total 724 units. So
that's amazing. What do you think? So as you grow larger, you scaling, you have to figure out how to have regular deal flow and how to raise increased amount of capital. What do you think are the keys so far? And it changes depending on your scale, right? You have vastly different problems at 2,000 units, et cetera. But getting to this point, what has been kind of the key to your ability to scale?
I think it's just the biggest thing is just surrounding myself with people that are better than me. I'm putting myself in the room with people that know how to capital raise better than me and that can add value and come in as a partner on the deals. But, I think that's a huge factor. These deals are, big enough to justify having 4, 5, 6 partners sometimes. And, I'd be foolish to think I could do it all by myself. Maybe in, a number of years, several years down the road, I could, but it's also fun doing deals with people that you trust and love. And so we keep doing deals with the same groups. Yeah.
Now, what's your outlook right now with where the market is, and do short, medium, long term? Because I think they may be a little different. Like, are you guys still buying? What is your long-term outlook for the asset class? Kind of what's next for you guys?
Yeah. You hear different things, right? There's different opinions all over the place. Some people want to take a back seat for right now. Other people want to push the gas pedal down. We're kind of fall somewhere in between. We still want to be active. We still want to, acquire some deals, but we're probably going to be a little bit more selective moving forwards, just with interest rates and, out here in Texas, insurance is going up quite a bit. We just recently, had an issue over there with that. But I think just be selective and just be extra conservative when we're underwriting these deals to make sure the numbers, still work for our investors and ourselves.
So let me talk to you about it, because I had a conversation with one of my peers who shall remain nameless, but he's a bit on the, and you're right. There is definitely a camp between the sitting on the sideline and I'm just going to full pull board. And like, we are kind of in the middle as well. But this particular individual who has owned thousands of units, he's just very conservative, and it served him well. He's had a very long career. But my observation and discussion with him recently is if you're too conservative, you don't get deals done, right? If you're too aggressive, you're going to get burned. So how do you find, let me give you an example. I want to see how you do it. For example, for the longest time, we used to underwrite, rent increases before COVID at 2.5%. We did this for years, right? It served us really well. Well, last 12 months, 18 months, rents have gone up in many cases, 20% and even higher, especially in Texas and where we are in Atlanta. And you're like, wait a minute. And we noticed this when about 4 months after COVID, we lost a really big deal to an institutional buyer, and we're like, what is going on? Because these are sophisticated, right? Why are they outbidding us by such a wide margin? And they already saw inflation coming and we didn't.
Mhm.
And so they took the deal from us because we're still using numbers from freaking 3 months ago. And so
Sure.
as an example, and of course it turned out really well. And so the clearer you have your crystal ball, and the more dynamic you are in your underwriting, the more you're going to win. So I'm just wondering what you
Mhm.
guys are, how you guys view that philosophically almost.
Yeah, I mean, things have changed. Are you out in Texas? Is that right?
We're in Atlanta.
You're in Atlanta. So yeah, I mean, a year ago we were underwriting deals, 500 to 750 a door for insurance. And this year we're underwriting at 1,000 a door for insurance. And with even recently now we're pushing that up even higher, closer to 13 to 1,500 a unit, just to depending on the property, if there's any lost runs and whatnot. But yeah, I think just being extra conservative in every aspect. But gratefully, and thankfully I've got Brett, who is a master of that stuff. And he, it gives me confidence when he sends a deal over and it fits our criteria. Well, I know that there's extra meat on the bone.
So what areas do you like to be more conservative on? Because it's a bit of an art and a science, right? So there's science behind, certain things you just can't change. And then others you're like, I'm going to add the padding in these areas. I'm just curious, what areas do you prefer the padding to be in this environment?
Yeah, I think rent growth and insurance, especially those. I mean, we usually, those are the main ones really. And I would say, I mean, $1,500 is a lot per door when you're underwriting deals. So it's if there's some extra there, then you're doing good. So yeah.
So what's your advice to someone listening to this right now and like, should I wait? Should I not? And if so, how should I proceed? Like, what do you think?
I go back to that. The saying, I hear it all the time. It's like, wait and buy real estate, or buy real estate and wait, right? And I like option 2 better. Buy real estate and wait, and just make sure you got a good team that's been around the block and been through multiple market cycles and knows what they're doing, so you have confidence moving forwards.
Yeah, absolutely. So what's next for you guys? Like, let's fast forward maybe, I would say 2 or 3 years, which is a long time in this business, right? Have you thought about what your company might look like?
I mean, that's going to be a really exciting time for us, man. That's when we're going to start exiting our first deals.
Yeah.
And I don't even know what that looks like yet. So I think, I would almost reverse the question back to you guys and say, hey, when you first exited your first, 2, 3, 4 deals, what'd you guys do with it? Did you reinvest it? Did you, what was your guys' plans? Because that's going to be a fun time for us.
I mean, it depends on the market, right? I mean, so far we've been reinvesting. We've been definitely been rolling. The challenge is the underwriting changes so rapidly, and so the loan to value is going down, interest rates going up, this escrow here, this insurance thing here. So you really have to stay nimble. But in general, long term, we're bullish on the asset class. The key for us short term is how to get into it. So, we saw a lot of people get into at the height, which was probably March, probably the height of the pinnacle of prices. And man, they paid a pretty penny for it. And so now it's of course worth less, as we all know. Are they losers? Maybe, but probably not. Okay. So they got into the game. Did they overpay as we sit here? Yes, they probably did. But how about next year? Okay. Next year, they're probably going to be laughing at us for having got into a deal that we, let's say lost, right? So I think the key for us is how do we get into there, especially how do we get the debt right that allows us to get in there now that the debt is changing and it's kind of wacky right now. We saw the same thing after COVID. So long term, we have a pretty good outlook. This short term is how do we get into a deal, and we did it twice after COVID. And it was primarily because we got into the right debt, a different debt product, because bridge loans lending went away. And then we were able to educate sellers who had unrealistically high expectations. And we were able to, get into 2 deals like that. So I don't know. What are you guys doing? Go ahead, Garrett.
I was going to say, there's always a give and a take, Michael. And if you're going to have like the best debt ever, and it's that time frame, and it's maybe what we were seeing a few months ago, then prices are going to be affected in a way, and I've like in a way where they're rising, right? So and then if you get into an area where you have kind of uncertainty, like right now, we're seeing a 10 to 15% reduction in the prices of real estate, which is an opportunity.
Yeah.
And so that then, like you said, it's just figuring out, okay, what mechanism, because you still have to set things up behind the scenes properly. You can't just throw that to the wind. That's super important. And so now it's just figuring out, all right, what is that behind the scenes going to look like? So I could take advantage of this opportunity that exists in the marketplace in general. And so, Eric, for you guys, I mean, what kind of debt are you guys looking at right now? Like, particularly, just curious. Are you guys looking more at agency, more bridge? You guys looking at local banks?
We've been doing bridge debt, but I think we're wanting to be, kind of pull back a little bit on that. Variable rate caps are expensive as heck right now.
Yeah, they are.
And so we're learning that as we speak. But yeah, I mean, we've done, 4 deals in Houston and the one in Dallas. And I think we're going to start one kind of pushing back up into the DFW market a little bit more. Just, larger rent bumps up there, but yeah, we'd like to kind of look back towards agency if the terms look good. So it's just kind of, the debt's a big factor, it's a big factor.
Yeah, I agree. So a little bit to figure out here in the short term, but I think with Garrett and you, Eric, there's going to be a lot of opportunity in the next 6 to 9 months. And man, I surely would like to capitalize on it, because that's how I feel. You don't want to compromise your underwriting on it. But so
we'd still love to do between 500 and 1,000 units a year. But I think you just have to be a little bit more selective on the types of deals you're doing and where.
So what's your advice to someone who's listening to this right now and wants to be like you, Eric, right? So you were 18 months ago, you're like, man, this job sucks. I want to get out of this thing. What are some of the steps that you advise that they should do over the next, 30, 60 days?
Anytime you can put yourself in the room with people that are doing what you want to do is a good time. So just keep putting yourself in those situations. Go to multifamily conferences, go to multifamily meetups, go to an event, take advantage of a mastermind or education program. I think all of those things will help really propel you in the right direction. It's not to say you can't do it on your own and learn this thing, but you can really put yourself on a fast track if you put yourself at the, get a seat at the table with people that are actively doing this and doing it at a high level.
So put yourself in the right room. Let's just go. I'll pick on that one right now. Why do you think that's so important? And maybe why was that important to you? What does that do for you if you put yourself in the right room?
Yeah, I mean, they say it all the time, but your network is your net worth. And anytime you can get around, the amount of conferences, when I first started, I went to multifamily meetups or conferences several times per month. Whatever conference there was, I was going to it. Whatever meetup there was locally, I was going to it. And just really asking people about them, their business, their life. Naturally, it's human nature. They're going to start asking you about your business, your life. And that's when you can start building a relationship with them and maybe, find an investor, or maybe find a sponsor, or maybe find a business partner, or, maybe find a local boots on the ground, someone in that particular market. And just always being on the lookout for potential partnerships.
Yeah, Eric, couldn't agree more, man. I think when I was restarting, this is my second real estate business with Michael and Drew, and a really key part of it was just getting into that room. I made the agreement with myself that I was going to go to at least 2 events, major multifamily events per month for a year.
Mm-hmm.
And out of that, I found this new amazing partnership. So just getting around people, just talking to people, and then I built an amazing network as well. So I couldn't agree more with that. Eric, how can people get a hold of you if they want to find out more about what you got going?
Yeah, I'm all over, the social medias, all of them. I primarily use Facebook, LinkedIn for multifamily stuff. The Instagram is more of a little bit of a personal page, but anywhere online, or you can just, find me and my contact info at www.gibbiescapital.com. That's GIBBYS capital.com. And you can find info on my team and what we're doing there.
Awesome. Well, it's been great to have you on the show, Eric. Thanks so much.
Yeah, great chatting with you guys.